please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Udayan Mukherjee also joins into our conversation now. Udayan, good morning. I'm sure you looked at the GDP numbers. What are your thoughts on that? You think growth is something that the market is going to latch on to? I mean, yes, GDP is a lagged indicator, but even if you look at lead indicators like commercial vehicle sales, they've been picking up quite a bit.
Morning, Sonia. So, yes, the GDP numbers will make the markets happy, but I think the market will also know that come next quarter in Q2, Q3, we'll probably get closer to the 7.5% kind of handle once again, once this base effect gets neutralized. So the surprise is not that big once you adjust for the base. And I think the attendant concerns around the market, which are to do with crude prices, elevated fiscal deficit because of GST collections and therefore higher bond yields, and the way the dollar is behaving, might rein in any kind of huge reaction from the market in terms of the GDP surprise. So it is good news, but I think the macro, there are enough wrinkles which are around this GDP growth number for the market to fret a bit once we've got the first flush of the reaction out of the way.
Okay, well, good morning. Then actually now we could become, this double deficit kind of worry for foreign investors. While they should be attracted by growth, the July trade deficit raised fears of a current account deficit that could be close to 3%, and the GST numbers are not at all encouraging. Do you think we will sometime pay for it, or will growth paper it over?
Right now, there is too much momentum in the market right now, Lata. I don't think people are fretting about current account deficit and things like that. I think generally the Nifty is on a bit of a tear, and till that momentum breaks, I think these macro things might be brushed aside. But they are piling up, you're right, that because the GST numbers disappoint consistently, and given that the election kind of drumbeat will also start playing as we get closer to the end of the year, I think it's a fair estimate that we'll be staring at a significant fiscal deficit slippage by the end of it all. That, and we are talking about all of this with oil still not having crossed $80. Now, imagine our macro picture, given all this kind of good news on growth. If oil were for some reason to go to $90 a barrel, what would it do to our currency, to our bond deal, to inflation, and to the RBI stance? I think, and it's just about $10, $12 away. So, I mean, these are things which one needs to pause and think about before getting carried away on the macro. There are enough risks on the horizon, but right now, as I said, there is enough momentum for traders to shelve those worries for the time being.
Okay, fair enough. Then good morning. So the last month belonged to IT and pharma, of course, rupee playing a big part. Your thoughts on the kind of rally that we have seen, large cap, mid cap, everything participating?
Well, the mid caps did pick up, Anuj, in the August series, and we did see a 5% kind of up move in the mid cap index as well, which is good because mid caps were lagging the large caps terribly. But in the context of the market, I would say it's still relatively narrow. I mean, even if you look at this 1,000-point rally over the last couple of months, which frankly surprised me, I must admit. But, there's still those 5 stocks, Reliance, ITC, ICICI, and TCS and Infosys, which accounted for 600 out of those 1,000 points. So, in the scheme of things, it is not a very broad-based kind of an up move, though you can't fault the move of the Nifty. Going forward, I think people will still back the exporters right now because they have the momentum and the currency behind them.
Then I wanted you to stay on for just a bit. What do you make of Yes Bank now?
I don't know where this thing will head, Lata, frankly, because so far Rana Kapoor has been allowed to continue. Whether there will be a change or whether he will continue going forward, we'll have to see. But the reaction was quite sharp on Friday in the stock price in any case. So we'll just have to see. I mean, I'm presuming that is the only news that is swirling around Yes Bank, unless there has been some other news which I'm not aware of. But I think the market is basically thinking a lot about what is going to be the management picture for many of these private banks 1 year out. I mean, all of them, HDFC Bank, ICICI Bank, Axis Bank, Yes Bank, I mean, they could have IndusInd Bank, they could all have new managers. And the past crop of managers have been so instrumental in creating enormous amount of wealth. A little bit of a stutter is quite understandable, but sometimes the change is for the better, so we'll see how this pans out.
Okay. What about the move that we're seeing in the commercial vehicle space, Udayan? I mean, it's been a couple of months now of very good numbers coming in. Ashok Leyland once again is making an attempt to get back to its all-time highs. You think this is a space that could continue to see more traction?
It could be, and on hindsight, Sonia, Ashok Leyland gave you a very good buying opportunity when it dipped to close to 100 rupee levels because of all the tonnage concerns which came about. Now they seem to have reduced a bit and the stock has bounced back, of course aided by the monthly numbers which have been very good. Let's see how the interplay of market share between Ashok Leyland and Tata Motors also plays out. But if you have to play commercial vehicles, I guess you have no option but to go with Ashok Leyland, because for Tata Motors the bigger consideration of course is JLR, which sometimes surprises on the negative, or mostly these days, and sometimes pulls out a good number. So that's becoming very difficult to predict, the JLR EBITDA margins. But I think Ashok Leyland probably saw its bottom at around 100, 105. I don't know whether it will hit a new high immediately, but the stock which continues to worry investors is really Tata Motors from that space.
All right.